Look at Apple. I mean,
Yep.
it's really surprising that they racked up so much on China. Now that's going to have a massive impact on Apple. Most of the products are made there. You can cut it and slice it in any way. They cannot offset the margin risk. The iPhone sales are going to be dramatically impacted in the second half, most likely. It's going to we will see how China reacts to this. China accounts for 20% of sales for Apple. So the local population, let's see if they're going to go with local brands. I mean, it's just a big mess for Apple, frankly, at this point. But when we look at the other vendors, when you look at the software companies, which even though they don't have the direct exposure to China, I think when you look at an economic slowdown like this, you're going to see brakes on technology spending. And by default, a lot of what these guys sell to the market. We looked at growth estimates. As of December 31st, the top 50 software companies, they had a median growth rate of 13.2%. 2 days ago, we looked at it. People have not brought their numbers down. It's still 12.4%. So we think that number gets cut down by quite a bit over the next 1 month, 1.5 months.
And that's not in the stocks yet.
I can't tell whether that's on the stocks or not, but it's definitely not in the sell side estimates consensus out there.
Well, here's what I wanted to kind of pull back a little bit. We talked about this with Mike, sort of what the headline and tariff risk is, and then what the actual fundamentals of the tech industry. And that brings us to the news that Microsoft, that Bloomberg broke, has pulled back on a bunch of data projects, right? And there was a whole list, right? UK, Indonesia, Australia, Illinois, North Dakota, Wisconsin, etc. So how do you read that? Like, is that a sign that we're paring back everything and it's all over, or what?
No, how do I read that? I will wait for Satya to make his comments on the conference call, because there's likelihood that he may say, listen, I'm happy to lease that same amount, just not build it. So from that point, it's okay with me, because they're still seeing the inference coming in and they're still going to spend the money. They are just deciding not to build it themselves, which is fair. I mean, it's either rent or buy. I mean, it's up to them. So I think those are going to be the most critical comments. Yeah. But it's tough for me to see how any executive can give any decent guidance into going into this particular environment later this month.
So important, rent versus buy. Okay, this is why I had that tutorial with Anurag. This is why you got to do a call. You got to call him after the show for half an hour.
Yep.
And then you will understand all things.
Tom Keene watching the show here, trying to learn.
He's just jealous that he doesn't have the tutorial for Anurag.
Exactly.
Okay, so then if it is just the tariff impact, then if that's really like what is rocking these stocks, which companies are most exposed? Like, which software companies are going to be hurt the hardest?
See, I think Apple's the one, we talked about it. But then you have to look at it where the valuations are still higher than pre-pandemic levels. Look at somebody like a Shopify. It's down huge today because their valuation's a bit high. ServiceNow, they have a lot of Doge exposure as well. So there are names out there that are far more, on that value range, where are far more expensive than historical norms.
Again, but we're not making a valuation call here, are we?
No, not at all. No, we are.
Because there's still risk to estimates is probably a reason.
Massive risk to estimates, and we don't know where the growth is going to be in the second half right now. Yep. And we have seen in the past recessions, things dry up very quickly.